Existing home sales did rise more than expected in March. That reverses 3 months of decline. CNBC's Diana Olick joins us with Washington with all the details. Hello, Diana.
Hello, Larry. And like you said, yeah, we did see a big, healthy bump up in existing home sales in March. And you could probably thank the home buyer tax credit, which expires a week from tomorrow. That said, take a look at the numbers. Existing home sales rising 6.8% to 5.35 million annualized units in March. Inventories up 1.5% to 3.58 million units. Median existing home price at $170,700, basically flat, up 0.4% year over year. But what I want to take a look at is these inventory numbers. When you talk about month supply, yes, the month supply came down a bit from 8.5 months to 8 months. That's because you had a growing sales pace. But also you had when you look at what happened last summer, that is in July, you saw a real high raw inventory data. Then you started to see that coming down December, January, but February and March bumping up again. Why? Probably two reasons. Number one, you've got the spring market, sellers hoping to get in on this market, hoping to get in on the extension of that home buyer tax credit. But you've also got increased foreclosures in the pipeline. We know this because the realtors tell us that we saw investors as 19% share of the market, cash buyers 27% share of the market, and distressed homes, that is foreclosures or short sales, making up 35% of all home sales in March. So again, foreclosures feeding the pipeline, and we're all waiting to see what happens after the tax credit expires. Will we be able to hold on to these gains, or will we see a drop-off yet again as foreclosures increase? For more, of course, go to the blog, realtycheck.cnbc.com. Back to you, Trish.
All right, so is it better to buy or rent your home right now? Let's bring in Adam Leitman Bailey, real estate attorney, and Illan Bracha, managing director at Prudential Douglas Elliman. Thanks to both of you for joining us. I would ask you first, what is your reaction to the data today, and what do you think it means about prices? Have prices bottomed? Because that sort of really sets up our discussion, I would say. Adam, what do you think?
It's garbage. These are steroids. These are steroids put in the market. It's going to fall. It's guaranteed that home prices will fall for the following reasons. Number one, interest rates are at zero. The buyer, a 30-year fixed buyer, is paying a little over 5%. Those have to go up. Money is expensive. The higher interest rates go up, the more expensive it is to buy a home. That means sellers are going to have to sell their homes for less. Number two, the inventory. Banks and the government have been refraining from doing foreclosures, and the foreclosures that they're doing are keeping inventory out of the market. So until those homes have new buyers, we do not have the entire flood of inventory that's going to hit. That's going to guarantee prices to go down.
Illan,
so if you're only buying for 5 years, this is a horrible time to buy.
Illan, Adam obviously thinks that prices are going to continue to go down lower. I have always had a theory that when we see interest rates go up higher, that buyers are going to come off the sidelines because they're going to think, wow, there's been a bottom put in, interest rates are going higher, I need to get while the getting is good, and that will drive prices actually higher. So I disagree with Adam. What do you think?
I agree with you, and I disagree with Adam. I think the confidence on the street, we see a lot of buyers coming in. Every day we're selling more. The last 3 years since the credit crunch, and we're all looking at the Lehman Brothers, it's September 08. But again, if we're looking at the whole country, the credit crunch since August 07, it's already at 3 years. We're almost tapping it at 3 years, and it's a cycle. People feel it. There is a confidence out there. The market starts to stabilize. We already saw the market is going down 25 to 40% down. Yeah. The market went up about 16% based on fact since the last summer. There is confidence. I think the market going back to stabilize. I don't know if we're going to see like what we saw in the past, but it definitely a stabilized market and a normal market, and the confidence is out there.
Right. So, Adam, let me just, we have a debate about prices. That's an important debate. Let me just make sure. You're saying rent. Is that where you come out? Rent.
Well, rent temporarily. If you believe in the American dream, which isn't just buying a home and getting a home, and that's the American dream. It's a toil and sweat and having enough money to buy a home one day. That is what we know as the American dream. So if you can afford a home, if you have the savings, if you have the reserves, if you can make the 20% down payment, if you can afford the attorney fees, the bank fees, the engineer fees, all the fees included in buying a home. And then once you've bought a home, the yearly taxes, the yearly maintenance, what happens if the roof breaks, who's paying for it? Right. Those are all significant expenses when buying. If you have the ability to buy and you have that money, then you have to make a decision on where the market is going to go, whether you think it's going to do better or not.
So, Alan, all right, do you have a response to that? If you're more optimistic about the market, are you telling people to buy? In a sense, it's like buying stocks low. Is this the right time to buy? Now, the trouble with this, as you know, my friend, this is a regional issue. The national stuff is really very difficult. Some cities got hit much, much harder than other cities. So can you generalize on a buy versus rent matrix?
I think the buyers today are smarter. It's a new world. Nothing's going to come back. We look in the history and nothing changed. It's not going to go back to what it used to be. It could be something different. It's a different world today. The buyers are smarter. They're coming in. They know the comps. They know what they're looking for. And they're not going to go in and take mortgage higher than what they can afford. So it's a new world, and I think that it's supposed to be new expectation.
Yeah.
It's not like it used to be.
Isn't the basic decision, though, gentlemen, that you're supposed to be looking at? I mean, it was a given a long time ago that if you bought a house, that was the way to go. You know, home prices were going to go up, and this was the smart decision. But what it's really all about now is the equity in your house going to grow faster than the money that you lose on the friction costs, whether that's the taxes you pay when you're buying and selling. You know, it's whatever you pay for your mortgage, it's whatever you pay to move, whatever you pay to buy furniture. I mean, the equity in your house has to rise faster than all of these fixed costs that you're just dumping into the house, right?
That's a fantastic point. Remember, if you're buying for 30 years and you believe in America, you still would buy a home. And interest rates are very low. So interest rates being low, you're buying it for very cheap. But if you're buying for 5 years and you compare the cost of renting, well, you don't have any fees. You don't have any roof repairs, you don't have any taxes compared to buying now for 5 years.
And your equity's not going to go up 20 or 30% probably any longer, so it's may not be worth it. Okay, we got to go.
My crystal ball at least goes out 5 years, and it's a bad time to rent for the next 5 years, unless you're getting an incredible deal, which if you work hard enough, unlike in stocks, insider trading in real estate is condoned.
If you're renting, I will put an option to buy. That's my point. If you already need to rent, put option to buy.
Okay, guys, thank you so much for joining us. We really appreciate it.